Every year, millions of taxpayers make the same mistake. They wait until April for what they could do in October. What I like to tell my client is October is the new April. Think of it, what you used to think in April is now what you should be thinking about in October. Especially if you are considering, especially if your situation changes, if you're considering doing new things, if you feel like your taxes you were overpaying taxes, if you're considering that your tax experience was overwhelming, was stressful, was insane, you overpaid, you were stressful the whole time, you did not trust your accountant. If that situation happened to you, you should definitely make your April be October. Okay? So what do I mean by that? So basically the way you should consider this is how I tell my clients is you have in every tax year you have winners and you have losers. The winners are the people that take care of their situations, that they planned, that they plan ahead of time, that they consider everything in their situation and then they act accordingly. Losers are what I just explained earlier. You're going all over the place. You're bringing up your situation in April. You're expecting miracles when all you're gonna get is at best some flawed advice and at worst situation that is just gonna put you in the radar of the IRS. And then if you do it with the wrong people, not only that's gonna happen, but worse, they're gonna do the taxes for you, and then they're gonna say bye. You might not see them again. So you see something that you should consider. And today I want to talk about what planning for you will look like. Okay? So, but this is the truth. If you're in that situation where you're in the ladder, where you were the ones that are stressful, that you're all over the place, last minute, you're not alone. Because it turns out that most people do it that way. And the problem is that by April, most tax saving opportunities are gone. You're basically making the job of the CPA, and that's assuming that you do it with a CPA. You're doing it most difficult because a honest CPA will tell you kind of bypassed what you could have. This is what you could have done had you come in April. If we had this same site visitation that we're having right now in April, if we would have done this in October, this is how much I would have saved for you. Now, you're coming in at the last minute. It's a year over. That doesn't mean that there's some things you can still do. But the truth is, a lot of the opportunities are gone. Basically, that bus kind of went bye-bye. So, October is the best opportunity to take the advantage of the last chance you have to take care of some amazing opportunities that you might have. This is not like, how I always say in my videos, this is not a silver bullet that is going to apply to everyone. But, most people if you're in a situation where you're creating your own business, you're expanding your business, you're thinking about doing a side hustle, you're a high earner W-2 that is looking into retirement, that wants to lower their tax bill. It's completely overblown. This is the video for you. So, my presentation. I'm Julian Gonzalez. I'm a founder here at Upfront CPA. I help business owners, investors, and professionals save on taxes legally and stress-free. Today, like I said, I'm going to go over some amazing opportunities that you can take advantage today in October, and for you to consider visiting your CPA before the year is over. This is stuff that you can do right now that you're gonna regret that you didn't do them if you only show up to your accountant in April. So, what is the problem about April? I call it panic April for most people. So, you show up to your accountant, you give him a profit and loss, you tell him, you give him some kind of QuickBooks balance sheet or whatever you might have, some scramble that you have on paper, and you tell your accountant, hey, I want to pay, this is how much I paid last year, this is how much my neighbor paid, this is the idea that I had in my mind that I wanted to pay, make it happen. So there's so much that is wrong with that, I don't even know where to begin. But that my recommendation and any good accountant's recommendation is gonna be, do not do that. One thing that you want to do is, number one, be organized. Number two is be tax compliant. And if you do the situation that I just said, you're gonna hit both out the window. Okay, so you can't change your income, right? You generally can do certain things with expenses. You can, there's some things like depreciation that you can add, that are like non-cash expenses that you can work with when it comes to your deductions. But your income cannot change. Usually, like if, for example, if you get a 1099, the IRS is gonna get a copy of that. So, if you think you can play with your income, you'll be, you're gonna be disappointed when you might get a letter. You're most likely gonna get a letter from the IRS saying what is called an unreported income letter, which basically says, how are you saying that you only earn, just to give you a number, $80,000 this year when I have this copy of a 1099 that says that you earn $150,000. So that's something that you definitely you want to avoid. You want to make sure your books are clean, that they're not a mess. That's number one. Just have clean books. If you're a business owner, if you're whatever the stage of your business that you're in, it's so important that you're organized, that you're maintaining your books clean. Now, this might sound a little bit, depending on your situation, this might sound a little bit more difficult than it sounds. Because, accounting is not an easy profession. Accounting is not an easy industry or an easy service or hobby or whatever you want to call it that you might get into it. It's not easy. So when you're an accountant and you are, just to give you an example, you're taking care of expenses, you're booking deductions, you're doing journal entries for certain transactions, ahead of time where that's going to end up, either on your profit and loss or in your balance sheet. So you have an idea of all the transactions and how you want that to look like in your books. Obviously, if you don't have the background in accounting, and if you kind of follow the advice from the QuickBooks commercials, and it's just easy, you just click in and out, you swipe like you would do in like a social media, TikTok or whatever the case, that's how they make it sound like. But the truth is, if you don't have an accounting background, this may not be the right, it may not show up in the right bucket, in the right financial part of the financials that it may actually be, that it should actually go. So, for just some kind of a background, you have your balance sheet and you have your profit and loss. Your profit and loss will determine what your net income will be, and your balance sheet is just basically the accumulation of what you have. Certain things should go on either bucket, and whatever bucket it goes to will determine how much you will pay in taxes. So that's number one. Number two is stay tax compliant. Tax planning is strategy. It's doing things right. It only works before the year ends. You only have that opportunity until December 31st to take care of most opportunities that you have. For example, let's say, today I just had a client come in that just sold their business this year. So that's kind of a life-changing situation, right? It's a business that they own for over 10 years, okay? So, there were certain discussions that we had about certain strategies that they had, but because they were not accountant, some of them were just didn't make sense. But some of them, they had the right idea of how they can get started to do certain things. But a big thing that they didn't consider was there were some loans that they still had that they only had until this year to take care of those loans. Otherwise, they were not going to be able to do, let's say, for example, a lot of the items that they had included in there were stuff like equipment, a lot of items that are depreciated, that if they sold it this year, they're going to get the deduction for the loss for the sale. And today, this is the year where they want to get that done, because this is the year of the sale. So if they sell the business, it had some It had some net income. It had some capital gains associated with the sale. So today's the year for the opportunity to get those loans, to get them off the book with the loss that can offset that gain on capital loss. So here, no, it's not only the strategy, it's also the timing. And then back to this situation, if they would have waited till next year, if they don't do it before the year end, guess what? That opportunity is gone. They're going to end up paying way more capital gains this year, and they may not be able to take the deduction from the loss the following year. So it's very important to take care of to be tax compliant, to have the books clean, visit your CPA before the time is over. So now I want to talk about what I called, so that was the April panic. So now I want to talk about the October advantage. So this is more looking at what can I do in October. Okay, so October is a perfect window. It's the last quarter of the year. You kind of already know where your business is headed. You already kind of tell, is it similar to last year? Is it very different from last year? Unfortunately, in this new economy that we're experiencing, we've seen quite a few declines on most industries, unfortunately. So we can start planning, right? Is this year looking like it's less than last year? So how do we adjust for that? If our business took a hit, maybe we should look at certain strategies, or at least at best we should be able to see less of a tax bill. So how do we do that? We got to take care of our tax estimates, right? So during Q4 is the perfect time to have a clear window where your business is headed this year, where you're gonna end up. So important, the tax estimates, right? Q1, Q2, now we're in Q4. This is the best time to make any adjustments that you might have before the January deadline. Now, as I mentioned earlier, I gave you the example of the sale of the business. So another big one is the equipment and vehicle purchase. It's the perfect time, right? You already know, you kind of already, like I said, you already have a clear window of a knowledge of how much you're looking at in terms of net income, what that might look like. So does it make sense to purchase that equipment this year? Does it make sense to use the standard, the 100% depreciation, the special depreciation, the double depreciation, however you want to call it? Does it make sense to use the 179, the 160 AI? So all of that is, you have to play it into, this is something that you need to show up to your accountant and give him to take a deep dive into your book, give you some numbers, give you some examples, ask questions, because that's going to determine whether you overpay taxes or not. Does it make sense to set up some fund for retirement? Do I have enough to do some kind of a company-wide structure for retirement? Does it make sense that I use the retirement plan that goes off of your earnings? So there's so many discussions that you can have, and this is one that you may not only want to include your CPA, but you also want to talk to your financial advisor. Those two can kind of just give you the perfect mix of taking care of your tax situation, including your finances, to come up with the perfect retirement for you. So the SEP IRA, right? The self-retirement one, the IRA is a better 401k. Should I do a straight to retirement? Should I do some backdoor IRA? So there's so much to consider, and a simple visit to your tax accountant will take care of that for you. So just to give you one example, we review taxes for accountant for taxpayers every year. People like maybe yourself who is looking to maybe upgrade your accounting, is not sure. Maybe their accountant didn't respond. Maybe they have a good CPA, but he's retiring. We're actually seeing quite a bit of that. And, we actually were able to restructure the withdrawals to do a late year the SEP retirement, and that saved them like over $14,000, just one example. Okay, so these now we're talking real numbers. Just going back to the example that I gave you about the client that came in today, we did a walkthrough of the savings that they could have, and basically, if they only report, if they don't take the losses for this year, their capital gains will be somewhere about the $100,000. Okay, so we're talking about a capital gains of $100,000. That could be, depending on the tax bracket, it could be even up to 20, someone in the 20%. Let's just average to 20% taxes. We're looking somewhere in the $25,000. With the deduction plan that we came up with, the $100,000 we get half of that. So we're looking at a savings of somewhere about just $13,000 just from that sit down. So to me, it's almost funny to hear, some clients when, for example, they might consider a CPA, or they might consider like a real tax strategist, and they'll say, well, they're charging me for a consultation. I can't afford $200, $500, whatever the case might be, when you're saving thousands and thousands of dollars. So that's something that you should definitely consider. Okay, so one last thing is, proactive taxpayers do things differently. That's just the reality. There's just no way around that. If you can change that mindset to be that reactive person where it's just like they're thinking of October right now, and it's just already dragging in their minds that they're gonna have to show up early next year and deal with this situation. I'm telling you, if you're on that bucket, it's just, you just make it harder, more difficult, more painful, and potentially more expensive for yourself. Okay, it's just simply is the reality is, if you're able to just take some time, if you're able to be proactive, just kind of change that mindset from, okay, I'm gonna play defense and I'm actually gonna go into offense. I've seen it a million times. The situation for my clients change dramatically. You see it in their faces. You see it in their manner. They see it in their tone when they call you, from just being very stressful and calling multiple times a day because they can't deal with the situation, to more of a calm, I already kind of know where I'm headed situation. So don't wait till the IRS tell you that they owe that you owe something. Don't wait till you get a non-compliant letter, a possible audit. That's the worst situation that you can do. So just to give you a kind of a summary, right, when it comes to that, is number one, keep your books clean. Okay, every quarter, just kind of think about quarter, like think about it just like a basketball game, right? You got quarter one, quarter two, quarter four. Quarter four is the final quarter, right? You're down to the last few minutes of the game. This is when you can come clutch and just change the trajectory of the game, right? And that we can do that with simply keep your books clean. That's number one. Review your finances. Very simple. Right, you have that's step one, right? So step one is getting your books clean. You cannot do a financial review without having clean books. That's just the reality. I've seen so many people that will say, hey, like, my situation is a mess. I may or may not have QuickBooks or whatever software for accounting. I commingle accounts. Just giving you the worst example. They say, okay, so give me an overview of my situation. Okay, so it's like, it's not gonna happen. I mean, I can maybe just kind of, hoping that we can make some guesstimates and get them right, that maybe this is where you're at, but it's at best a guess. So if you really want to look exactly, or at least to the proximity to 100% to where you want to be confident what you are at the moment, the first step is have your clean book. Step two is, then from that point, then we can make a review of the financial statements on a quarterly basis at best. And from there, we can forecast income, right? That's the key. That's when we start making decisions. That's when we start making strategies. Okay, that's when you meet with your CPA before December, and you can start talking about numbers. Now it's the numbers of your company. And then around this time, we're talking about numbers that you're going to save. If you talk to the right CPA, they can give you pretty good estimates of how much you can save, if you meet with them at this time. Now, in October is not the only time you should meet with your CPA. It's probably the last chance you have. But if you want to be even more proactive, even to save even more money, it's better that you meet with them on a quarterly basis. Because what happens if you meet, let's say, on quarter 4, and turns out that you made a mess the whole year? So there may be some cleanup that may need to happen. There may be some opportunities that you may have had before that now it doesn't make sense to do them now. Maybe, which it happens quite often, maybe you went and pulled the trigger on an expense that if you would have waited till Q4, or maybe you could have waited till January, you would have saved money. So if you meet with your CPA regularly, it's gonna be even better for you. Some firms like myself, we offer good retainer plans where we can do this for you on a regular basis, where you can meet with us, we can plan, and we can even include your tax filing as part of that retainer. So we make it easy for you, we make it efficient for you, so that basically you have a stressless tax. Let's call it a tax situation. Okay, so you have a peace of mind, so you know that your books are clean, just going back to review, so you're gonna have peace of mind. That number 1, your books are clean. Number 2, you can do financial reviews. Number 3, importantly, you can forecast your finances. You can do budgets. Very important. If you have expenses, if your cyclical, budgets are a must. And you can regularly communicate with your CPA. So we can offer that for you at a very affordable price, and something that is custom to your situation, so that you can take advantage. Okay. So how do I start now? Okay. So Julian, okay, you've been talking for all this time. So what do I need to do? So I'm kind of gonna give you an overview of what I need. Of this is kind of what I'm gonna end this video with. I'm just gonna give you the final, basically, call to action of what you need to do. So number 1, schedule a tax planning session. Okay, you don't have to call me. You can call a CPA. You can call, I would recommend a CPA just because we have the certification to take care of that stuff. We've been, if you talk to the right CPA, they've had experience, they've done it multiple times, they've done it to multiple industries, they know how to take care of you. So my recommendation is to do a tax planning session. Okay, this is, don't guess, just get the numbers right. Number 2, run a year-to-date profit and loss. Okay, so this is gonna give you the overview of where you've been and where you're going. Okay, like as I mentioned before, it's probably better that we do this on a quarterly basis. But if you haven't done that yet, this is for you. Run a year book a tax planning book a consultation with your CPA. Run the report so that you don't go to the meeting and then give me your report. Then you have to go back, create it. You don't know what you're doing. You don't know how to get it. You're wasting time, right? Probably even better, send the CPA your profit and loss just to have a look, maybe to see if it makes sense. Okay, review your payroll. If you have payroll, if you're an independent worker or contractor, whatever your situation is, make sure you bring that to the table however you're getting paid, right? Whether that's distribution, whether it's payroll. It may be a situation where you might need payroll, even if you're not getting paid through payroll. So, and this is why it's important that you do this in October, because if you're supposed to be paid in payroll and you haven't done it yet, right now is the time to do it. Look at equipment, look at improvements, purchases that you have done, purchases that you haven't done, and purchases that you're looking to do, whether it's something that you should take care of this year or the next. Now, and then finally, your estimates, right? How many estimates have you paid? Any estimates this year? Were you required to pay estimates? If you didn't, do I still have time to do it? So all of those are questions that you need to bring to the table as a final recommendation of your to-do list. So I hope you found this video to be helpful to you. Here at Upfront CPA, that's exactly what we do. We review books, we make recommendations, we look at your projections, we help you come up with those if you haven't done it already. We help you look at budgets if that's necessary for your industry. We help you. We implement strategies. We work with you. You have the knowledge to your business, and that's if you're good at your business. We're not gonna be able to tell you what's the best way to run your business because that's what you're good at. But we're good at accounting, so we can make your knowledge and turn it into something that is going to work for you, so that you don't make the mistake that you're good at running your business, but then you're not good at numbers, or you're not good at organizing the accounting of what you're doing, and then you can have a profitable business that it looks like a mess, that you're passing on good, for example, good like opportunities for a loan, right? An opportunity for an SBA loan that we've seen quite often. You don't know how many business owners have come to us and, hey, I have an opportunity for a project that I'm considering. There's an opportunity for an SBO loan or any type of loan to make that happen, but I don't qualify because my books suck. Sorry, excuse my language, but we've seen that quite often. So here at Upfront CPA, that's what we do. Whatever the situation you're in, don't worry. We can take care of you. We can help you turn that situation into something that you're gonna be happy, something that you're gonna be. So we can switch from having that stressful April and make it a useful October. Thank you, everybody, and I'll see you on the next video.